Mortgage rates went up almost 0.25%. Well, the Dow Jones plummeted as well. But what's happening today? Well, the Dow Jones is up 1,000 points. Well, unfortunately, the MBSs are down 7 ticks. That means mortgage rates are going to go up just a little bit more. What's on the economic agenda today or this week? There's a lot of information, so let's get over to it. So my name is Dan Frio. I do this report 2 times a day and inform you guys what's going on with this stuff and what's going on with housing. I also talk about equities and cryptocurrencies and bond markets because I want you guys to understand these markets. But my focus is on these things right here because my name is Dan Frio and I'm a mortgage loan officer where our slogan is one application, one credit pool. We're going to shop your loan to over 30 different lenders. You can't do that on your own, I bet. But how do we do it? I'll give you all that information at the end of this video. So without further ado, why did interest rates go up 0.25% yesterday? This is where I say, folks, pigs get fat, hogs get slaughtered. You can't wait for that ultimate interest rate you're looking for to pull the trigger on interest rates. If you're saving, a bunch of money on your refinance, your break-even point is, maybe less than a year, might be a good idea to do that. But we're going to focus in on that, especially new home buyers. So I just got back from New York, fantastic visit. My son just got married up there. But the interesting thing is there wasn't a lot of construction. Like I just went to Denver 2 weeks ago. There is construction everywhere. I live in Chicago, construction everywhere. I went to New York, and now I can see where if existing home sales aren't there, the new construction market, especially in New York, is really tough. So let's get over to see what's going to happen this week in the markets. So without further ado, let's get to it. Right now, we got the Dow Jones up 1,000 points. So it's basically just a seesaw effect. What's going on? Well, some of the countries are starting to come to the negotiation tables. Well, part of the Trump administration is saying, nah, they're not. And then others are saying, well, yeah, Japan, I think, is coming to the negotiation tables for this. So let's see how all this plays out. But today, so far in the market, it's looking so good for the equities, but in the bond market, not so good. We go over to the bond market, it's down 6 ticks right now. If you're new to my channel, what this means is we follow here, this right through here, the MBS. This is a mortgage bond that trades on Wall Street. We don't follow the 10-year Treasury. We don't follow anything else. We follow the mortgage bond because the yield on this thing is the biggest component of your mortgage rate. So right now what we focus in on is this. This is the price of the bond. What you have to understand is, well, how does this equate out to an interest rate? Well, great question. All you have to do is understand this. If this number is going down, that means rates are going up. There's an inverse, a yin-yang effect. So in the bigger the number, well, the bigger the adjustment. Yesterday, let's look at yesterday's chart. This is nuts. Okay, but if we go to a 5-day chart, look at where we are. Okay, so we're still down a little bit. This means mortgage rates are up. And that's what we still have. We're having a lot of people call us and saying, Dan, did you lock us in? Can we take advantage of those lower rates? Well, folks, we took advantage of those for you right when we told you it was going to happen. And now rates are going up from here. So when this opportunity comes to you, you can't wait, especially if you're looking to refinance. Now, if you're looking to buy, that's a whole different story.